Hey investor friends, I'm Michelle Marki and I want to ask you, what do you think about the legendary Big Short investor Michael Burry's knowledge drops and observations that he shares on Twitter? Do you find them helpful, or do you feel like his stock market warnings are almost annoying and you can't bear to read another one of them because he's like the boy who cried wolf? Let me know in the comments, because even though there could be a lot of warnings that he's issued, and maybe there have been many times that he's been wrong if you read about that in one article, but other times there could be some legit market warnings that he has, as some believe that he's issued some of his most dire warnings yet. And so on the whole, even though we have to take some of what he says with a grain of salt, at other times maybe he's making some really important judgments that it would be wise for us to pay attention to. So I'm going to give him the benefit of the doubt and talk about some of his best Twitter hits lately that I found really compelling, because he's also been talking about things like bear market rallies, like I have been wondering about lately, as to how much of a stock market retracement is meaningful or not. And so I find some of his knowledge to be personally helpful, because I like being prepared for the potential downside in the stock market if there's going to be one, as well as how, based on his second quarter 13F filing of Scion Asset Management, I think that reveals a lot about what he's expecting in the coming months, because he sold out of all of his positions except for one. And I think that that's a huge clue as to how Michael Burry is preparing for the near to medium future. So if you also like following along with what Michael Burry's doing on Twitter, and also shout out to the Michael Burry archive, because without that, we would be lost without some of Michael Burry's tweets that get lost in the cyberspace forever. So shout out to them, and thanks for hoarding all of his wisdom, because it helps me a lot. And if you enjoy my content, please like and subscribe to my video and YouTube channel, because it greatly helps out, and I'm trying to help you and I be better investors, and I appreciate it. So let's get into some of Michael Burry's activities lately. And as far as what Michael Burry's investing activity was like between April through June 2022, it was extremely bearish, and I believe reveals a lot about what Michael Burry could be thinking next. And even though it's really hard to predict what Michael Burry could be thinking, the fact that in his Scion Asset Management 13F, he sold 11 equity positions, to me is a super bearish signal as to what he believes could be coming, because he only added one equity position, and that was the GEO Group with ticker symbol GEO. And GEO is a Florida-based company that invests in private prisons, mental health facilities, and detention centers in the US and abroad. And he only invested about 500,000 shares worth, or about $3.3 million worth. And that's a pretty small drop in the bucket for Michael Burry, because he has assets under management of about $292 million, which means that this GEO investment only makes up 1% of his portfolio. So that means he could have as much as 99% in cash, or maybe he has some of that in other things he's doing, like maybe he's doing some options trading or has it in other investments that I wouldn't know about. But it's really telling to me how much he's not having much faith in the markets right now. And I think that that's consistent behavior with what he's been warning about, especially in August, where he's saying that contrary to a lot of people believing that markets are going to go up now because people believe the Fed is not going to raise interest rates that much more, and they're going to maybe have to cut rates in 2023. At the same time, Michael Burry has issued some super serious warnings based on both what his Q2 portfolio looks like and also his tweets. So I think that it's super meaningful how he's really barely invested right now. And so buyer beware if you're going to follow Michael Burry in and out of stock positions, because he had been reducing, if not totally selling out of GEO for a few quarters before he bought back into it in the second quarter. And so definitely make sure you totally understand any company before you were to invest in it, before you might just blindly clone what a super investor might be invested in, because the outcomes could be bad for you if you don't really know what the investment case is behind any given company. And we also don't know if Michael Burry is just kind of using it as part of any options trade strategies. That's also something that not all of us may necessarily be privy to. So just be aware that Michael Burry could have some really advanced investing and options trade strategies that may be a little bit outside our circle of competence. And also, even though he's been really early with some of his prognostications, he said this about 2008, where it's like watching a plane crash, and he said it hurts, it's not fun, and he's not smiling. And he says this because he's early habitually by about 1 to 2 years, and that means he's kind of attained broken clock status, or what a lot of people like to believe is that he's just wrong about a lot of his warnings. But maybe he's not wrong, he's just early on what he's guessing could happen in the stock market. And I think that he's trying to signal that he's guessing that stocks are about to go down a lot more from here based on his really bearish second quarter positioning. And with the following tweets, Michael Burry is pretty critical of the Federal Reserve and their actions with regard to inflation and trying to deal with it. And the resulting effects on the overall economy are pretty bleak. But I think it's important for us to keep this in mind and brace ourselves for the worst possible scenarios, because Michael Burry believes that the Fed doesn't really have an intention of fighting inflation, that they're basically just doing some rapid fire QT just so that they can eventually cut rates again as they're reloading the monetary bazooka and doing monetary printing and helping to finance the fiscal put, as he puts it. And also he believes that inflation will have the last laugh, as it only has to peak once, and then there could be some negative outcomes after that. And also he believes the dollar is not strong at all, and it's probably getting weaker. And also the Fed is behind on some of its reduction of its balance sheet and not yet selling enough treasuries and mortgage-backed securities like it said it would do. And finally, I thought that this was sort of funny, even though it's not going to be great if we have a recession at any point in time, but we might need it as part of a healthy reset of the economy so that we can truly recover. And he said this quote, where in 2022, what brings a Christmas in July? And the answer is a disinflationary, overstocked consumer recession at Christmas. So there we have it. And throughout 2022, Michael Burry seems to have spent a lot of time trying to educate us about how dead cat bounces are epic and how this year is so much fun because of all the doomed rallies. And there's been so many posts regarding how much there have been bear market rallies. And if you're like some people who were looking for gold in the California gold rush of 1849, more often than not, you may have stumbled across fool's gold, because there were many bear market rallies in the aftermath of the .com crash in the NASDAQ. So maybe it's not such a good idea to be so heavily invested if it's just going to be a sucker's rally and really it's a bear market that could be hiding in bull market clothing, and maybe we could be seeing a lot more downside than many of us are expecting. And recently he wrote on August 12 that NASDAQ now up 23% off its low. Congratulations, we now have the average bear market rally across 26 bear market rallies from 1929 through 1932 and 2000 to 2002. The average is 23%. After 2000, there were two 40% plus bear market rallies and one 50% plus rally before the market bottomed. And on August 14, he wrote that contrary to the internet and the Twitter sphere, there have been bear market rallies that eclipsed 50% retracement and led to a lower low. And he listed the following of April 1930, November 1938, June 1946, and since 1950, November 1968. Depends how you define a bear rally and or a cycle, and life is greater than charts. So even though we might think that some of these retracements happened way long ago, like in the 30s and 40s, 50s, and maybe we don't think that those times in the history have much bearing to today's markets, maybe Michael Burry won't be proven wrong. And I think that we're better off trying to heed what he's pointing out here than just kind of ignoring it and investing at our own peril. And for some of Michael Burry's final warnings and observations of what we can expect to play out before the stock market bottoms includes how there will probably be a good amount of consumer suffering, since he said we gotta love human nature as markets are dealing with high inflation that we haven't had in over 4 decades. And what that could mean is that American real wages are down, and we're also decreasing our savings rate because we're having to spend to offset the effect of inflation on higher consumer goods and services. And so that means that there could be a consumer recession looming, as well as more earnings trouble ahead. And he feels that it's sort of the last hurrah in earnings season, because he's sort of wondering if it's 2001 or 2022, because during the Great Recession, earnings fell by 91%, and that was a lot. So first we saw multiple compression, and then he believes there will be earnings compression. And also he feels like before we were to see a market bottom, that we would probably end up seeing the theater that took more than a decade to overstuff, and it's not likely that everyone gets out in less than a year. And he doesn't think that this is going to be over until everybody swears that they will never own an NFT, they will never own crypto, and they will never own a technology stock. And he cited Tom Siebel in that quote. And such was the sign in 2002, 1932, and 1974. 2009 was a panic bottom, but 2007, not a speculative peak in stocks. And also he said in early August 2022 that the silliness is back, and after 1929, after 1968, after 2000, after 2008, the strain of silliness that transformed bulls into bubbles completely and utterly disappeared. But that familiar COVID era silliness is not dead yet, like 2001 before Enron, before 9/11, and before WorldCom. And so what I think he's sort of pointing out is that we may not have seen the final catalyst that will bring the market to its knees and cause a lot of people to sell out in a panic. And maybe he believes that the final bottom for the S&P 500 might not be until it reaches back to 1862. And we have more than halfway to go to reach that level again. So out of all these warnings, I feel like it's sort of a symphony, or like a mosaic. If you put all these tweets together, you see enough patterns and some guesses as to what Michael Burry is thinking, that maybe this is where we might be headed toward the end of September and December in 2022. And so I know that was a lot of information all at once thrown at you, so feel free to go back in the video and pause and read more of the tweets if you want to study exactly what Michael Burry said in those tweets. And also feel free to visit that Burry archive and read through and look at some of the charts he also shared. I think those are also pretty invaluable. And so what do you think? Let me know in the comments what you think about all of Michael Burry's warnings and what you think that could mean for the future or not. Maybe it doesn't mean much at all. I'd love to hear from you either way. And if you enjoyed this video or learned something, please like and subscribe. And I wish us as much luck as we're going to need to get through whatever might happen toward the end of 2022 and beyond. Till next time.